Hey everyone, Sherman the CPA here. Today I want to show you how to create a budget for your small business step by step. I recently helped a small business turn a $30,000 operating loss into a $38,000 profit in just 5 months. And all we did was create a budget for her business. Without a budget, it is virtually impossible to grow or manage a successful business. You won't know how much to pay yourself, how much to pay your vendors, or even your employees without setting a clear budget. It also would be extremely difficult to manage your profits and your cash flow to make sure your business stays afloat. So if you want to prevent this and build your first budget with me, make sure you watch this video until the end. And be sure to like this video to help me get this information out to more entrepreneurs. And if you want to learn even more ways to increase your wealth, make sure you subscribe to our channel. All right, so what is a budget? In 2 words, a budget is a spending plan. It allocates the money you earn to a specific destination. Now, this destination might be in your pockets or in someone else's, but the idea here is that there should be a plan behind how your dollars are being spent or invested for your business. With that said, let's talk about how you can start creating your budget. Since you know that all budgets are spending plans, you need to have some money to spend in order to create one. Typically, the money comes from your sales revenue. Your sales revenue is the money you earn or the money you expect to earn in the upcoming period. This represents the total amount of money that you will be able to spend with your budget, which is the foundation of the budget creating process. All budgets begin with a sales projection. Then, using your sales projection, you can determine what expenses are required to operate your business. And ideally, you can set limits for various expense categories that you have so you can ensure that your business is profitable at the end of the day. I like to use the percentage of revenue method whenever I create a budget for any business. I like using this method because it practically guarantees that the business will be profitable regardless of if it actually meets the sales forecast or not. In order to use this method, you would need to take your total business revenue and assign percentages to various expense categories that you expect to have in the upcoming period. And as long as you spend the money your business earns in accordance with those percentages, then you will be profitable. For example, let's say you plan to make $100,000 in sales this year. Well, a good budget might take that sales number and say, okay, we'll spend about 10% on marketing, 40% on salaries, 10% on rent, and 10% on tools and software that you expect to use, leaving you with a 30% profit margin. But let's say you notice that sales come in a little lower at $70,000 instead of $100,000. And because you notice this also means you would need to cut your expenses to match this decrease in revenue, which means instead of spending $10,000 on marketing, which is 10% of the expected revenue, you will only be able to spend $7,000 on marketing, which is 10% of the actual $70,000 in sales you have coming in. Basically, as long as you stick to the percent allocations inside of your budget, you will be fine. But you will have to monitor your actual business performance against your planned budgeted performance and make adjustments to ensure that you stay on track with your budget on a consistent basis. Now let's go over each step to creating a budget for your small business. All right, step number 1, determine your business goals. The very first step in determining your budget is to first determine your business objectives for the upcoming year. Are you looking to increase your sales? If so, by how much? And what expenses are necessary to accomplish this increase in sales? Or maybe you're looking to improve your product or service. What improvements will you need to make and what impact will it have on your sales revenue? And more importantly, how much will it cost? Or maybe you want to buy a business. What is the revenue of that business and how much are you willing to pay to acquire it. Your business goals should be top of mind when creating your budget. Knowing this upfront will help you determine how much to allocate to certain expenses that you expect to have. Step number 2, forecast sales. A simple way to do this would be to look back at your sales numbers from prior years and compute your growth rate. This will tell you how much your business is growing from year to year. Then once you know your growth rate, you would just apply it to your revenue in the last year to arrive at your sales forecast for the upcoming year. For example, let's say your business earned $250,000 in year 1 and $575,000 in year 2. That is a 230% increase in sales between those 2 years. And let's say you expect to continue growing at that same rate. Well, in that case, you would expect to earn $1.3 million in sales in the upcoming year, which is a consistent 230% increase from $575,000. Now look, if you're starting with nothing, then you will probably have to take an educated guess at your first year sales based on what is common for your industry. Step number 3, allocate a percent to each of your expense categories. Once you have your projected sales, you can start assigning a destination for those funds. Here you want to think of the major expense categories in your business, like accounting, advertising, technology, employee salaries, and so on. Then you would assign a reasonable allocation to them based on what you may expect to spend on these expenses. For example, let's say you project $1.3 million in sales. You can then break that sales number down into the expenses you expect to have and the profits that you want to be left with. If you're having trouble with this, then you can research average expense categories and profit margins in your industry specifically to help you create these expense allocations. But do not follow any budget wholeheartedly. You need to carefully consider your expenses and what is absolutely necessary for your business to incur. You can make it a part of your business strategy to have very high profit margins or low margins with extremely competitive prices. Your strategy will consequently determine how much you can allocate to your various business expenses. Also, be sure to account for your own salary in your budget if you're doing any work in your business. Your salary should be accounted for in the employee's salaries or in another area, but not in the profit margin. By budgeting in your own salary, you can plan to replace yourself in the business in the event that you need to work on something else, or maybe you just want to retire and let the business run on its own. So here's a simple rule I like to tell people. Budget a salary for the work you do for your business and receive profits for the ownership interest that you have in the business. Step number 4, convert percentages into dollar amounts. The final step here is to apply your projected sales to the expense percentages to see the actual dollar amounts of your budget. Simply multiply your projected sales number by your expense percentages in each category. Now, since you did this based on your annual sales and not monthly sales, you can convert this into a monthly budget by simply dividing these numbers by 12. And that is literally it. You will have your budget, and now you can hold yourself accountable on a monthly basis. As you can see here, you don't need a fancy budget template to do this. You can do everything I just mentioned by using basic multiplication and division. Let me know what you think about this video in the comments below. And if you enjoyed it, make sure that you are subscribed to our channel. I look forward to seeing you in the next episode. Thank you for watching.